Hey everybody, good morning. Oh, Infinity, Philip beat you this morning. Larry, Dex, Ben, George, M714W. Don't recognize your name, but welcome. JB, Kevin, George, JB again, Valerie, Tara, Craig, Merle, David, Francois, Gary, Don, Svenborn, Rungamer. You still driving, my man? Michael, Mary. Don't recognize Mary Miller, but welcome. Carlene, Nikki, Cliff, Deb, Kimberly, my lovely wife. Glad to have you on the stream. And TT, Ryan, welcome. Darren, welcome. Sergio, Maurizio. I try to remember everybody. If you're brand new, give me a shout out too, because that's cool. Sometimes I don't always recognize new names. There's a lot of names. And I appreciate everybody jumping on the stream, chatting with me, talking to me. CPI out this morning, and no real surprises. I might say. I mean, it did come in, I guess, a little to the green, a little positive, a little hot, you might say. But we can kind of flip this over and look right here. Core CPI 0.3. We were expecting 0.3, got 0.3. This one expecting 0 and got 0.1. Positive, I don't know. Year over year, 3.1, 3.1. I mean, is inflation really 3.1? I don't think so, but whatever, I guess. We were kind of, I don't know. The month over month, 0.3, 0.3. So that's the core. I mean, I feel like price is still creeping up. Things I buy. I guess CPI, if you take out all the things that we buy, all the food, all the energy, all the healthcare, all the, hey, there's no inflation, right? I mean, that's the joke. So why would you adjust it? Why not just take a broad swath of the things that we, the people, buy every single day to survive and use that instead of trying to cook it on some, oh, we should take out energy because energy is so volatile. What the peep? We should take out food because, that's not really, you don't have choices. Well, food's something that, I mean, I spend quite a bit of my money on food and shelter and, no, we should take out house rent because they're being stupid right now. Yeah, okay. And if you own a house, what happens if you don't pay your property tax, right? So you rent from the government, they come take it. I mean, we all pay rent, whether you own it or you're buying it or, you actually rent it. We're all paying rent in some way or another because if you don't pay your property tax, they'll come take your property. Ridiculous. Anyway. Welcome everybody. Welcome. So, about 100 of you on the stream right now. So if you're brand new or whatever, go ahead, click the button over here, become a member or a subscriber, I should say, not a member, a subscriber, and you can chat on live stream like all these fine people saying good morning, and a few seconds later, that's all it takes. That's the only requirement. And if you want to hit the bell with the notifications, then you can come back and see me every day when I go live. Maybe YouTube will give you notifications if it's something that you might interact with. YouTube's smarter than just, you're like, I want notifications. And they're like, I don't think you're going to watch it. So they won't give you notifications. It's crazy, right? Anyway, interact with the video. Give me a thumbs up if I say anything you find beneficial. And that's more interaction and maybe you'll get notifications. Anyway, welcome to the Morning Monster. I drink Monsters because I don't like hot liquids. Coffee, just coffee, tea, soup, you name it. Hot liquids, just not for me. Anyway, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here is intended to be informational, educational, fun, entertaining, and is not a recommendation to buy or sell any financial instrument or anything else. Don't buy anything. Don't buy stocks, don't buy options, don't buy forex, don't buy futures, don't buy cryptos, don't buy bonds, don't sell them, don't long them, don't short them, don't buy stuff from gurus, don't buy stuff from me if you don't trust me. Don't buy stuff from gurus you don't trust. I mean, that's the whole reason I do this right here, is try to build trust. And remember, I don't give advice. So if you desire personal financial advice, you got to hire and consult a financial advisor that has a fiduciary duty to take care of you. Now, I do offer different levels of following, and one of those is in the description down below. For $5, you can get all the things on your chart I'm going to show here today, like the roadmap line. So, jumping into it. Why did that disconnect? We have made the higher high. We are like the same pattern I always talk about, and this is actually a 3-day pattern, not a daily pattern. Look right here, 3-day market roadmap bounce right there. Perfect. Works on the 3-day chart. We are 70% likely to go tag that 47.18 area. Now, do we get a pullback into this zone before we get there? Quite possibly. Could do a daily roadmap bounce inside the 3-day pattern. All right, remember, this is bigger time frame stuff here. Now, 70% likely before we come back down to the 3-day roadmap line. So don't get confused on the daily chart when I talk about that we could come back down in this zone. And as this creeps up on this 618 retrace zone, we could come down there and retest it before we make it up here, even though we're close. All right. What might be catalysts? Well, we've got CPI today. Kind of a volatile reaction. Actually, I brought something to talk about, and I just reminded myself. So let me pull that up here in a second. And we've got PPI, and we've got the big show FOMC meeting. Starts today, ends tomorrow, 2 p.m. Set your reminder, set your calendar, set your alert, whatever it is. If you're a day trader or a short-term trader at all, be careful. That FOMC can definitely bring some volatility. Now, I brought a chart to talk about, in particular on the smaller time frame here on ES. This is the S&P 500 futures. This is a different charting platform that I use. This is live futures data. I snapped this just a few minutes ago before I came on live. Look at this. Look at this move up. This was a very clear 3-wave correction right there. This was a very clear 1, 2, 3, 4, possibly 4, 5. The smaller moves in there. I mean, this could have been a 1, 2, 3, 4, 5, 4, 5. We tagged that 1618. Same pattern right there. Retrace, extension, 1272. Kind of slowed down there for a bit. Rode just above it all night. Dipped and spiked it on the CPI right there. Be careful out there today. We're starting to hit these upside targets and starting to fill out the upside. What does that mean? Downside is becoming more and more likely. All right. Be careful. I told you I watched these small time frames in the futures. This was a 15-minute. I watch all the way down to the tick chart sometimes. What platform is this? This is Motive Wave. If you've never seen this before, it is kind of like the Rolls Royce of Elliott wave theory counting platforms. It actually has like an AI-based wave counter in it. You can just like highlight the section of the chart, and it'll break down every Elliott wave there is. I don't use that very often. I just use my eyeballs, since I actually have spent years at this. And so, where does that leave us? Leaves us being cautious, all right? I think it's very prudent right now to be cautious. I speculated that we may see a spike to a little higher high. We're close. If we get another update today, we may spike a higher high. Look, it's like an echo of this move right here. Pop, dip, pop to a higher high. I mean, even that one, almost exactly the same. We pop up here, we're still higher. Simple as that. This worked over and over and over for a long time now. Sometimes we get some chop in the middle. But overall, once we're at the bottom, we tend to go back to the top. Once we're at the top, we tend to go back to the bottom. Once we're at the bottom, we tend to go back toward the top. Once we're at the top, back to the bottom. Over and over and over. It's like a giant market oscillator that actually kind of sets the direction here. I mean, get near the bottom, get near the top, get near the bottom, get near the top, get near the bottom, get near the top. Sometimes there's some double dips. We were down here in October, I said, watch out. I mean, put the big blue arrow on it. Probably coming out the top. There we are. I mean, so just a matter of time. We don't usually hang out here longer than about 15 trading days once we get to extremes. Sometimes we chop, chop, pop, chop, get a little lower low, but about 15 trading days, 3 weeks ish, 5-day trading weeks. We could be due an outsized pullback. Now, does it happen tomorrow on that FOMC? I don't know. Does it happen Friday on the like 1.3, 1.2, 1.3 trillion dollar options expiration? Quite possibly. It's the last one of the year. Last big major, one that like quad witching, triple witching, however you want to say it lines up, where you have the futures and the option, all the different things are all expiring at once. The futures and the mains and the quarterlies and the halves and all the things all expiring Friday. Could that be the catalyst? Quite possibly. Could we see a big flush into the end of the year? Well, that's entirely possible too. I mean, we've only got next week's the last full week of trading left in the year. After this week, then we've got 4-day week and to end the year, and a 4-day week to start the year. Market closed on the 25th and the 1st. Plan ahead. All right, plan ahead. I'll be here. I'm taking Christmas and New Year's off, so won't be live those days, but I'll be here otherwise. So glad to have you on the stream. And any questions, let me know in the chat. Always love to chat with everybody. So yeah, Ryan, too many politicians. And unfortunately, that's just, it's like if you're not good enough looking to make it in the movie or, TV business, you go be a politician to get popularity. Or come hang out on YouTube because just being real with people seems to resonate, I guess. I seem to have a skill that maybe I make predictions that come true. Seem to get lucky often enough. So ES, looking on down that time frame, we did get the gap up, which has kind of skewed this a little bit. So let's look at ESH 2024. Just kind of clean this up a little bit. Look, the high from July was up here on ES. We're not quite above it yet on it, funny enough. So there has been some, I guess you say, decay. The futures contracts do decay. They do have a premium. You notice this one's 46.74, and the actual cash index like right around 46.20. So there's about 52 points of premium baked into the futures right now. That will bake out as we get to expiration. If you've never seen this before, ES1, let's load up the constant contract, subtract out SPX, and there's the difference between them as it, as the contract rolls over. You may be like, this is blowing my mind. I've never seen futures before. There's the futures contracts. They do expire. The active contract, ES1, the front month, what they call it. If you've ever heard of the front month referenced in an ETF management, that front month right now is the March 2024 contract for S&P 500. The ES, as I pulled it up a minute ago, ESH, H is March 2024. That's this contract. The December one ends this week. Just a couple days left, and it will expire. And it basically will have a value right down at zero difference between it and the S&P 500. And if we look at that, ESZ 2023 minus SPX, that's the actual December contract. You can see it right there, down to $4 difference, $3 difference. That was its decay curve. It actually went further away and then came back closer to zero. I did have some, it actually started out negative back here. Look. It was some backwardation. Started out a negative value, popped up to where it was like way overvalued and then came back down to zero, close to zero. Market opened. Interesting, interesting. So I've been speculating for a few days that we would see a pop and then a potential drop right down in the zone where the roadmap line, link in the description if you want it. And this downtrend of highs came together, retest that before we shoot on up potentially to new all-time highs. Now, the fact that we made a high higher than June on the cash index kind of tilts this baby to like 80% likely to make a higher all-time high than we've ever had in the S&P sometime in next year. All right, it's not going to happen like, I mean, we've got 2 weeks of less than awesome trading left in the year. We've got this week, we've got the rest of this week. I mean, 2.5 weeks, I guess you could say. We're not doing it this year. Next year, we've got a whole 52 weeks of fun. So definitely make sure that you're subscribed and come back and see what I got to say, because we're probably going to make a new all-time high in the S&P. But before we get there, this still hangs in front of us. We came up crazy. Why is this yellow box on here? Because we came up like a crazy, almost 13% right off the lows here in October, almost straight up. There was barely a pause or a pullback in there. What happens next? Well, after moving up like 13%, the odds are we're going to get a pullback. And that pullback, it's going to at least be 1%, if not 3 to 5%. So be careful, all right? We don't just shoot up 13% in the market, especially with the VIX as low as it is, without getting a pullback. So VIX hanging out right down here at the bottom. Could be a smart play to buy some VIX. I've got February calls for 14. Highly likely we see, this is kind of like the pulse of the market. You can see these spikes, right? We don't usually have a prolonged period at the bottom without getting some sort of spike. Even back here, pre-COVID, hang out a little bit and then get a spike. Hang out a little bit, get a spike. Some spikes are smaller than others. But even, this is always played out. All right. And you may be like, how do you have VIX calls? Type in VIX, the index, and I went and bought those calls. You cannot own shares of VIX. It's an index, just like you can't own shares of SPX, but you can trade options on it. So there you go. I think now, between now and February, kind of likely to see a pop. Maybe you fly out to March and do it. Maybe April, whatever you're feeling. But and remember, it's not a recommendation or an advice. I'm just saying this is like an opportunity that I see in the market that looks pretty high probability. Maybe an opportunity to make a few bucks when this thing pops. So I feel like we're kind of topping out here, potentially. Now, can we run higher? Sure as blank we can. We can go tag that 47.18 before we roll over. Right? That's the same pattern. You may be like, what's the pattern? Well, look at this. Walmart right here. Well, let's go look at it on the other chart where I actually have the drawing. Look, we popped that 1272 right after bouncing off the roadmap line. Wasn't a 3-day, it was a 1-day. We bounced, popped right up, hit it. Almost the same kind of move we've been doing on the S&P. And then gapped right down here to the roadmap line and been pushing lower. Could that be what the S&P 500 does? I doubt we get the giant gap that's like 300 points down in a day. That would be the equivalent on the S&P, but we could see a big drop like that. All right. These patterns work over and over and over. This is one of the most notable ones that just happened. Like Microsoft right here. It popped up, hit the 1272 and has been pulling back. So this pattern works, all right? It's the same pattern I hunt every single day in the market. every single day, all the way across the market. If you look for the high probability patterns, ignore all the dumpster fires and bull crap, I promise you'll do way better. Yeah, Digger posted, Mr. Klein, Jason posted in Discord yesterday in the testimonials channel, his IRA, like straight freaking up. It was a beautiful, beautiful chart. Actually, let me pull it up and share it. Like, I'll just share his chart. I won't share what he said. Right here. Look at this. Look at this. This is his 401k. He said he started trusting me and what I said, and look at the performance of his 401k. And this was, he started following me back here. And look at that. Isn't that beautiful? You could do that. I mean, just listen to what I say. You don't have to do what I do. You just maybe listen to a couple things. Maybe you learn something. All right? Follow the high probability crap. Don't follow some of these dumpster fires. I mean, stay away from the, I have 4 big things that I stay away from. China, low price stuff, leverage stuff. It's kind of like, I'm very careful on leverage stuff. It doesn't always follow the patterns. Biotechs. All right. So dumpster fires, I definitely stay away from. And I guess a 5th thing, I don't like to trade dumpster fires unless I'm like lighting money on fire, throwing the dice in the pit. All right. So Russell, looks like we're topping out here. We're getting really close. And I think at this point, this is more bullish since we came up right to that 618, getting a rejection. We may see that 618 retrace at this point. That basically qualifies as a tag. All right. I always say these are little fuzzy zones. They're not perfect lines on the chart. That basically counts as a tag. And we could see a 618 retrace here. Russell kind of set up for this kind of either 50 to 618. I think that may be where we head next. So be careful on that one. That looks like the last little squiggle. Right to the 1618. We're very low probability to go on higher without a significant retrace, at least to the roadmap line, if not down here. Oil still churning at the bottom. Watching that 69 level. We start getting a daily close below 69. Odds are we're going on down. It was looking a little positive yesterday. Now a lot of bit negative again. We can push on down. All right, this has been a potential on the chart. Although we could be hunting a bottom and we could get just a little extension. Run the fibs. That low, that high. Could push down to 68, 67. It's kind of hunting a bottom here. Yeah, it looks like we're going to push down to 68 at least with that move. Be careful. Oil hadn't, that's kind of telling us oil is not quite finding the bottom. It took us 3 days to climb, 1 day to drop. Obviously, there's some sellers out there. Gold, zoomer back, zoomer out, buttercup. Gold looks pretty likely to come on down and tag the roadmap line. If I'm completely honest, like that would be kind of what I expect after dropping this far. If we don't hold there, probably going on back down and maybe, just maybe, making a lower low. This was somewhat of a 3-wave move up into that high. It could very easily get an extension lower. And that extension lower down here around 1733. Wouldn't surprise me. Remember, 3-wave up, that's kind of corrective. That was not there. I don't see any way to make that 5-way, which would be a new impulsive trend, even though we spiked a higher high. Gosh, be careful. Bitcoin, recovering a little bit. I thought we were... Funny enough, when we were retracing yesterday up here, I was like, I think we're going to back test the channel. Well, that's what we did. Now, do we break back out of the channel? This is the big test right here. Can we get back out of the channel and go higher? Or are we stuck back in the channel? Or do we bust out the bottom of the channel and go for a deeper correction down in the 32 area, like I mentioned yesterday, that was possible? Those highs from back here, June, back in the summer, seems like ages ago. Lifetime ago. If we break below, we could definitely come retest that. So definitely keep an eye on this one. We break back, we push back above the channel, back above that 43, let's call it like 43,850 area. Back above that 43,850, probably going on up 46, maybe 48. If we don't break back above that 43,850, watch out. Coming back in here at least. If we break out below the bottom of the lows, coming back to the roadmap line. Simple as that. Simple as that. All right. You may be like, well, where's the roadmap line's way down here. Well, if we jump on down the time frames, we're close to the 4 hour. We're actually interacting with the 1 hour. Kind of holding it, kind of holding below it. Got to get back above it on the 1 hour. If we do, probably heading back up. If we reject and we start turning down, breaking a lower low, we're coming down to the 4 hour at least. That's the bottom of the channel. It's funny how these things line up. And then we could be heading on down to the daily, which is way on down, back there around the breakout point. Ethereum, Ether. Well, so it hit the classic pattern here. Hit the 23, pushed a little above it, got a little overzealous, a little overexcited. We retraced right back to the breakout point. Classic price action right here. These are fuzzy zones. We pushed the top of the fuzzy zone, tried to break above, tried to go to for the 1618. Ran out of steam. One big candle. We came down, touched the 100%. The next potential move. Right there, if we hold. If we break below, and look, that uptrend of lows kind of comes in the same spot. We break below that, we're going on down, back to the roadmap line. Back down around 1800. I sold out at 23 on the way up. My extra that I was holding, back down to the core holding. If we can hold here, we're going to push up to 25. Could get higher. So know your chart pattern. Know what your plan is. Don't, remember it's not being wrong that costs you money. It's staying wrong. If you're buying now and we start breaking below this uptrend of lows, don't stay wrong unless you're willing to ride it back down here and see what happens. All right. Fair warning. Dollar, holding on to that roadmap line pretty good. Tagged my target area, tagged that roadmap line. If we reject it, watch out below. If we break through, coming up here to test this zone, 105, we get above that, we're going up to 108 more than likely. If we reject here, we're going down to the mid-90s because that's where I've been looking for a long time. If we break above, we're going up here before we crush it down. Likely we're going to the mid-90s sooner or later. It's just likely to happen. This was like a 50% retrace. So far, we're working on the trend to go down here. And we could prolong that, push up here. That's actually a 618 retrace of this whole big correction. Right in that zone, 618. Pretty close. I didn't quite touch the top. So right in there. Could go a little higher. That'd be a big 3-wave corrective. And this would be the A wave. This would be the big B wave. And then we see a C wave that takes us on down. So that's the outline on the dollar. What's actually moving today? LIN. Look at that pop. Beautiful. Chemical specialty stuff. Beautiful run. There wasn't much pattern to catch it. It's like Popped up to the 1618, retraced back to the 1272, and popped the 2.272. May retrace back, retest that pop, and go for something higher. Doesn't have to. And how do you play that? Well, I would have been playing it back here, and I would have been out, and I would have missed this and not regretted it one bit. So MSTR, making the morning popper list, but kind of coming in flat now. And Bitcoin was running a little bit. Now we're giving it back a little bit. You know, MSTR basically hit the targets I was looking for. I stepped off of this one. It happened a lot quicker than I kind of expected it to. And that's cool. I always love it when they don't do what I want it to do. Just redraw this. There we go. Oh, that's cool. There we go. So we came up right in that fuzzy zone. At 613 area. So even if it wasn't, if you don't use log scale, we hit the target. If you do use log scale, we still basically hit the target. We did the move up to the 1272. We did the retrace back to the 100. We did that move up. Same pattern I was talking about. Over and over. Same pattern on Ethereum. Move out to the 1272. Retrace to the breakout. Push out to the 1618. Now what's likely? That. Back to the roadmap line. Now, the roadmap line could be much higher by the time we get there. So, same pattern over and over. Is it high probability? No. It's not high probability to trade it that way. So, all right. ICVX. Nice pop. Nice pop, nice pop. Right up to the 1618. Now, this is a pharmaceutical, biotech, biopharma, medtech. Be careful. I count all that stuff, whether it's pharmaceuticals, whether it's medical, whatever. It's all biotech junk. FDA junk gets involved. And when we zoom out and look at this chart, why do you want to mess with this? It's big down, big choppy. I mean, yeah, it could be fast money, but it can be fast going to losing half your account too. All right. It's not the way to play. It's not the way to stay in this game long term. Sure, you can make some quick bucks. There's another one. Look, giant dumpster fire of a stock. Look at that chart. Oh my gosh, that's a dumpster fire. Look at that. Why do you want to get involved in something like this? Now, why does it? When was it a $5,000 stock? Never. It reverse split 50 for 1, which is not bullish. Because we kept going down, and then we reverse split again, 40 for 1. So now you're like, multiply that, like what, 2,000? You would have had to have 2,000 shares back here just to have one now. Oh, that's the 40 for 1, yeah. And these aren't bullish, so it's likely to keep on trucking down. So divide these prices up here by 2,000. So it used to be $2, and now it's continued to decline until it's now $8 again. 2,000, factor of 2,000 loss. And not awesome. Don't get involved in this dumpster fire stuff, all right? Another biotech. This is the wrong environment for biotechs. Look, you can't lose bajillions of dollars of money and make it in this market where interest rates are not zero. There's a whole generation of CEOs that came up, went to business school under zero rate interest policy, ZIRP, zero interest rate policy. We were in it for basically a whole business cycle, a whole, like I said, a whole generation of executives have never seen rising interest rates. That's what we have right now. Rising interest rates. We're going to find out what the FOMC says this week. I'm thinking a hold because that's basically what they've said. They've been out in force for weeks saying we're going to hold, we're going to hold, we're going to hold. I don't think there's any surprises. I think they're going to hold. But I think the surprise could be that if the DGS2, 2-year constant maturity rate, crosses back above the orange, if we see it cross back above again, we're going to see them raise rates more. They could raise rates on up here, 9, 10%, before we have the actual financial crisis that's coming. Is it going to be in 25? Is it going to be in 26? I don't know. We'll see. We'll get there. Right now, kind of expecting that the 2-year actually crosses back above and we get higher rates. I'm not betting on a cut right now. All right. I'm not betting on a cut. And here's the shocker. When they cut, that means something's going wrong. And the market's likely to react negatively. It is not positive for the stock markets that we trade for rates to get cut. Look at what happened back here in the past. You may remember late 2018 into April 2020. What happened? We saw some chop, and then we saw a giant, big drop in the market where I made quite a bit of money. Anybody remember back here, 2006 to 2008? What happened? Anybody remember back here in 2000 through 2001, 2002? What happened? We saw big corrections in the market. When they start cutting rates, not positive. When they get to zero rates, we can start, finding a bottom. And they did say one more rate raise. That is true, Rungamer. They did. It could be a lot more than one. It could be one big one. But I think if we see the DGS2 take off again, it's a big red flag. If we see it drop on down, if we see it drop below these lows from back here, back below through like 375, they're going to start cutting rates. Right now, they're hovering. We're within the margin of error, I guess you might say. So this is one to keep an eye on. We start climbing above at 5.4 on the DGS2, the 2-year constant maturity, they're going to keep raising rates. Right now, it looks like we're in a hold. All right. That's coming up tomorrow. Let's see where we get to on that one. So you can't borrow money and run a company when the rates are high or going higher. Yeah, I mean, that's what puts biotechs out of business. I mean, you can't lose bajillions of money. And that's why, like 80, it's estimated there's like thousands of these zombie companies right now. We're going to see a lot of bankruptcies, mergers, acquisitions on companies that just don't make any money. Take-Two spiked at 1272, retraced to the 100. The next move, if we break back above like 158, probably going to 168 right there. And we're getting a little positive today, so we may see that play out. Coin was getting a little pop on the Bitcoin move, and now it's starting to fade. Starting to look negative. I was thinking we might see this retrace. We came up to this target. I've actually removed it off here. It was right here. Look, right up in that zone between the 1272 and 1618. I don't think I have that perfectly on the candle body, on the candles. Came up in that zone. Highly likely we get the retrace, at least back to the breakout point. At least back to 114, if not pushing on down just a little bit. Back where that roadmap line may come up and meet us. We may see this one drift off for a couple months. We've seen it do it a few times here. I got off of this one. I got off that train. Crocs, it was a pretty good train too. Crocs breaking through the downtrend line. What could be next? We've got this gap resistance right up there. We get above that 161, or we get above the 618 level, right around that 120 area, 123. Could be heading up to 172. Does have significant resistance on that gap and those levels, those fib levels right there. And consolidated before we popped it and after we popped it in that zone. That's a definite resistance zone going higher. Be careful. Watch for it to actually confirm. It could make a lower low. It did hit the target on the downside, so this could be a reversal, and we could get bullish, but we're not there yet. We're not proving it. WH, Windham Resorts. Sideways choppy. Look, the roadmap line's flat. I mean, it has a little blip to it, but could we break above? Yeah, we could, but that looks pretty gnarly so far. We've been sideways for a year. That's not a big trender. I don't feel like there's a lot of opportunity here. I mean, there could be. Could. I kind of feel better about it. When we break above 83, that we're gonna head on up to like 102. But that could take a while. Look how flat this is. I mean, we could be talking like out in the 26 before we, 25, 26 before we get up there. Just kind of slow moving. Better places to put your money. ALB continues to chop at the bottom. Not really awesome. Oracle coming on down. That did a 50% retrace there off that first move. Well, no, a little deeper. 618. Hit the 618. Don't always remember to update the fibs. Probably coming down here. 3-wave move. First move down. Echoes off of that 618. Very classic. 618 lines up with a bigger move up. Yeah. Oracle's probably coming down here. We get... Oh, I'm gonna set an alert because this actually looks interesting. I may buy Oracle if we get to 90. I may buy it long term. We come down here, bounce, turn higher. This actually could be a big potential move up. And we're not just talking 135, 144. We're talking potential for 184, maybe even 225. So going from 90 to 225, sounds like a pretty good deal. I'd be willing to give it a shot, especially since I'm looking higher on the S&P. Airbnb. Struggling to break above this consolidation. Once we get above 148, we're going to 165, maybe even something like up here at 214. So actually, I'm going to set an alert right around 148. Start breaking through that. I may add a new position for Airbnb. SBOW. God, look at that garbage. Sideways, lower high, probably going lower low. First move down. Well, let me just draw it let me draw it this way. It's more better for illustrative purposes. See that move down? Copied it right over to there. Probably going to 16. Now we could hold in here and turn higher, but at this point with that lower high right there, hit the wrong one. This one. See how we turned down the 786? That's not awesome. Wouldn't surprise me one bit. And why do you want to mess with that? Back here it was trending. I mean, look at that. That retrace, we were trending. That retrace, trending. Now we went into this crap where we're not trending. We're just churning. Hasbro is pretty much a dumpster fire. Dumpster fire of a chart. That was a lower high. Then back here. Yeah. No bueno. I was probably going lower. AMD. Yeah, it looks like we're getting the target. We're going to run up to the targets. 140, 150 are the targets. Be conservative. I know the numbers are higher. Be conservative on your targets. That 140 area, about 70% likely to get tagged. That drops down to about 40% likely to get tagged before we do a bigger retrace. Yes, those are lower than the previous high. This can just be a rally in a corrective move. Be careful. Invio, Nora Novadisk, Nova Nordisk, whatever, however you say that. Yeah, just turning. Probably going to come back to the roadmap line. Probably. That was the pre-split arrow. It did a real split, 2 for 1. And retracing, probably gonna, we could find a bottom in here, but this is like an echo pattern where that retrace, and we look better if we hit the roadmap line and then looked for the same kind of move. Right there. And GLP-1 drugs, super popular. Nora Novadisk and Eli. LLY. Can't remember. That one likely to either get down here or pop it. So EXPE, hey, that one's a monster. Breaking through resistance. May go back up to this area around 180. Yeah, big chop zone right up there. That was a big drop. After breaking through, we could just pop it right back up. That was choppy sideways. I'd wait for this thing to establish an uptrend, because right now we're just still, even though we're popped up here, it can come right back down. ILMN, that one's going lower. Dumpster fire. Could retrace the roadmap line. Right now we're way below the roadmap line. Roadmap line is down steep. Down is the name of the game. Kind of reminds me of the way. Look. Bounce off the roadmap. Down steep. Bias down on PayPal. It may come test the roadmap line, but still bias down. ZJYL. Topping out. Biotech med stuff. Don't mess with it. Not enough history. Just the roadmap line's only like that long, so don't mess with that. RTX, Raython. Despite making tons of money off of the wars, this one looks like it's going to turn down and go lower. Making lots of money off of war, but odds don't. Stuff doesn't look too good. How do you lose money? Standardized, we lost money. Reported, we made money. This is why I look at sales, not earnings. Look at that. The EB, Charlie Munger, smart dude, recently left us, late November. He said, if you see this EBTIA thing, where is it? I've seen it on here. I don't have it on here right now. It's the earnings before interest, taxes, whatever. Alphabet soup. If you just support that, replace that EBIT with bullshit when you're reading it. The bullshit earnings number is it's like, oh yeah, that's funny. So I look at sales and the price to sales. PS ratio is basically in line, so I wouldn't really expect much performance out of here. Hanging out at the historical long-term average until they boost their sales. It's probably about the right price. So if you could find a pattern in here, you could trade it. But right now, that looks like it's just going to keep chopping sideways. RTX. NOC. Let's just pop around, look at a little bit. That one has the opportunity to break above. Let's check out that. Price to sales, 187. And they're in line with their historic price to sales number. Despite all the wars and the record profit making off of this, doesn't look too bullish for these stocks. It's still looking bearish on that one. BA seems to be the only one bucking the trend here. Broke above the resistance zone. 262 upside target there. Probably heading up to 262 on Boeing. All right. That's the list for the day. My bias is cautious still. Big FOMC meeting coming up tomorrow. Even if they just say the thing we all know they're going to say, we could get a large negative reaction. Please be careful. This is like super dangerous. PPI tomorrow morning. As we look through the calendar, I'm just kind of like hovering. All right. I'm not really doing much of anything. Not really taking shots at much. PPI there tomorrow morning. FOMC 2 p.m. tomorrow. Set your alarm. Powell speaking at 2:30 if you want to hear him blab about how great he is and how he saved the world and blah blah blah. Talk about a conceited person. That's at 2:30. I'll probably post a live stream link, or Beth will, or somebody will post a live stream link more than likely. If you want to watch it, link will be in Discord. And Thursday we get more numbers: retail sales, unemployment. Friday we get more numbers: Empire State Manufacturing, flash manufacturing PMI, flash services PMI. So this week's not going to be dull. And we get that big OPEX on Friday. For gosh sakes, be careful. All right, please, 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 please be careful. Volatility, the VIX being that low, us being on this epic run higher, the odds are we're going to get some kind of negative reaction off of something. It's just a matter of what it is. All right. Which one's going to be the straw that broke the camel's back? And the mainstream media will be all over it. Oh my gosh, the market reacted so negatively to Powell's hawkish, dovish comments, whatever. Don't give me a bull crap. The chart says we're going to pull back. Do we pull back from here? Do we pull back from here? I don't know. I don't care. I'm prepared for a pullback. Hope you are. Make your choices. This isn't advice. So I'll see you later. I'm doing a presentation on VVD later on Zoom. I'll throw the link into Discord.